Certainly one of the earnings reports I looked for most excitedly was going to be this Nvidia earnings report. It's a perfect environment for them, and I think they were just poised to present a wonderful earnings report. You see after hours here down 0.5%, not really much action going on in after hours trading after reporting these results. So let's take a look at what these look like, and then we'll look at the slides, give a judgment to this company, see what's looking good for it. So Nvidia goes ahead and they, from a non-GAAP EPS standpoint, posted $1.80, beat by 12 cents. From a GAAP EPS standpoint, beat by 10 cents, posted $1.47. Overall, good EPS beat. There's no doubt about it. Anytime you can beat on an EPS standpoint, you're feeling good about yourself. Revenue's a beautiful one, up 38.7% year over year. Only a beat of $80 million, but this is because there was some upward revisions of revenue estimates. So that's why you see 38.7 is barely a beat somehow. But yeah, that's massive there. I mean, $3 billion, 38.7% year-over-year growth. That is big. It's a lot of money for a 3-month period, in my opinion. I don't know about you, but that's my perspective. So gaming rose 27%, data center rose 80%. That's a massive part for them. Professional visualization up 15%, and automotive down 7%. Gross margin rose 11.5%. Pretty nice. Net income of $917 million, up 132% year over year. Good, very massive there in terms of that. I love that net income line. I love it. Really do like it. And this company actually provided guidance, believe it or not. So they provided for a revenue of $3.65 million, which is plus or minus 2% is what they're guessing. GAAP and non-GAAP gross margin of 58.6 and 66% respectively, plus or minus 50 basis points on either end. Interesting. Let's look at these slides, and Nvidia is obviously known for putting quite a bit of info into their slides. So let's take a look as far as the highlights are concerned. Definitely they have a lot of mentioning here of data center and gaming, massive stuff. The A100 is in full production, fastest ramp in history, contributed to the quarter one revenue, up 20 times faster versus V100, the biggest generational leap ever. That's pretty cool. Unifies training and inference, adds multi-instance GPU capabilities to enable elastic data center. And the Mellanox acquisition closed on April 27th, which strengthens the data center strategy. Pretty nice. So for the March quarter, standalone Mellanox revenue grew 40% year over year to a record of $429 million. Immediate accretive to non-GAAP gross margins, non-GAAP EPS, and free cash flow. So they did have a transaction go through, which, even think about that, they had a deal go through in which they spent quite a bit of money and still posted a really good profit number. Revenue, you see just, definitely good growth. If you look year over year, you see the just pretty big difference, and it's been a good growth story for them consistently. Definitely something you like to see. Operating income growing big, net income growing big, EPS growing 130%. I mean, these are very good numbers. There's no doubt about it. And I look typically on the GAAP standpoint. I prefer looking on the GAAP standpoint than I do the non-GAAP. For me, it's just a better way to know exactly what's going on for these companies, because it's going to be the same for every other company. They're all getting judged on the same principles. So as far as their response, not too excited about that. It doesn't bother me too much. All companies are going to be doing the same thing in terms of sanitation, increasing costs, people working from home. Blah. Revenue, you see over there, down 10% quarter over quarter, just due to seasonality. Again, Q4 is a big quarter for them. For gaming, not a shocker, but gaming was up 27% year over year. Strong demand across all major products. They overcame the recent closures in iCafes and retail outlets with strong e-tail demand. I hate the fact that is what they called it, but that is what they called it. stay-at-home driving a greater than 50% increase in hours played on the GeForce platform. They launched RTX on Minecraft, the most popular PC game in the world. That's right. And this is to make your Minecraft, which is supposed to look like blocks, look absolutely stunningly beautiful, which is weird to think about, but it exists. That's right. They can do it. They released the DLSS 2.0 AI algorithm, effectively doubling gaming performance. Wow, good for them. From the data center perspective, up 18% quarter over quarter. Now, this is just massive growth. 80% year over year. Record quarter exceeding the 1 billion mark for the very first time. Broad-based demand across hyperscale and vertical industries. The new A100 GPUs contributed to quarter with strong adoption across the leading hyperscalers, and they gave solid visibility into Q2, so they can have a good estimate as far as what they're going to earn. As far as professional visualization, up 15%, down 7% quarter over quarter. Continued strong demand for laptop workstations. Turing adoption growing. Now approximately 50% of sales. Stronger demand verticals included healthcare, media, and entertainment. Pretty nice. Remote workforce initiatives boosted demand from customers such as Disney as well. Pretty cool. From an automotive perspective, just down overall. Definitely interesting to see. I think this could be definitely a decent area for them to continue growth in the future too, is this automotive segment. It's obviously, just think about the future, we think about self-driving, and the fact that Nvidia can get involved in this with their chips, it's pretty interesting. So Xpeng, I don't know, introduced the P7, an all-electric sports sedan with L3 automated driving features powered by the Nvidia Drive AGX Xavier. Production deliveries begin next month, so that's right. So this is an electric vehicle maker that is using this entirely, this vehicle that is powered by an Nvidia chip. Pretty wild. Announced that the Drive AGX Orin is powered by Ampere, our next generation GPU architect, and they announced that the Nvidia Drive platform extends from high performance L5 to very low power ADAS, all on a single scalable software defined architecture. Okay, automotive could be a really cool segment for them. I don't know, that's my perspective. It's good that this company is so diversified as well. We not only think about just the value that the data segments has for them, but data centers, gaming, all massive growth. Automotive could be very big for them. So it is a company very well diversified. It's probably one of the most well diversified tech companies out there. And I think they're really great at what they do. The only company I think that is similar in terms of diversification would probably be Facebook. Facebook's got everything. Let's just say it as is. But Nvidia, gosh, one of the best tech companies out there. They returned $98 million to shareholders in terms of dividends. Pretty nice. They raised some debt. Interesting. After the quarter's closed, they funded the acquisition with approximately $7 billion cash, and that's after the quarter's closed, though. So, again, next quarter you're going to expect an EPS hit. Outlook obviously good for the next quarter coming up here. Nothing too crazy. As far as the acquisition here, they will be enabling higher performance and lower operating costs to customers. Full stack offerings for processors to software will advance next gen data centers. Pretty nice. I mean, everything's just exciting for this company. I don't know. I think things are going to be really good with this transaction. It was a very smart transaction. As far as Mellanox as a whole, you see the growth in terms of Mellanox just year over year. Pretty nice. Yeah, definitely big stuff. And they're growing on multiple aspects as well. Just another way that this company diversifies itself. It's pretty exciting. Let's see. So obviously we talk about the A100. very nice. I mean, you can obviously see the data here as far as what it shows this is possible to do in terms of power. I mean, it's crazy stuff with this A100. Very, very massive. So what else good is on these slides? Nvidia overview. We know about the company overview. That's really as far as the quarter's concerned. Now they're going to get into details about the company. Obviously, this is just crazy what this company is doing. I mean, we're talking about just 100 best corporate citizens. Okay, we're talking about the world's most admired companies. That's right, they're on the list. They're on the 50 smartest companies list and the best places to work. That's right. Just massive growth for this company. Started with little chippies, and just continued to grow and expand. I mean, their chip catalog is just insane. Growth drivers in gaming, AI, AR, VR, and self-driving cars. Man, that's just crazy stuff. Gaming, they got a stormtrooper there. So looking at the balance sheet, obviously good quarter, but looking at this balance sheet, you see from that debt they raised, they've got $16 billion in current assets, or cash and cash equivalents. Total current assets of $19.5 billion versus a quarter ago they had 13.6. So you see a growth there. Total assets in general of $23 billion versus $17 billion. Pretty nice. But again, you will see also the liabilities increased a decent bit too. $10 billion versus a $5 billion number last quarter. So again, they raised debt and to increase their cash load. So your long-term debt increased quite a bit this quarter. Everything else was pretty normal. Overall, stockholder equity of $13 billion. So definitely a very beautiful balance sheet on this company. I like what the company's doing, and their balance sheet makes me happy. I can just tell you that. So I don't know, overall, obviously the valuation for this company it's pretty steep, and I think it deserves that valuation, all things considered. If we look at a company like this, how well poised it is for the future in just every aspect of the business, pretty much. I mean, every aspect looks to grow, and you're going to see this company grow massively over the next coming years. One that I don't think is even, I mean, I know the stock's at very high points, right? I mean, if we look year to date, it's one that's up pretty big. That's right, this thing's up 46%, but it's a company that hasn't really been impacted negatively because of all this, and even over a year's period, up 100%. Gosh dang, this stock is on fire. I don't think these levels are necessarily awful levels to invest in. I personally would prefer it around the $300 range. Now, is that asking too much? Maybe it is, but I would love this stock at the $300 range. I don't think we're going to be getting it, but if we did, I would be buying plenty. Plenty. But at this point, this is a decent hold. I mean, if you talk about owning this stock for the next 10 years, this is a company I would say absolutely hold for the next 10 years because they've got great things coming for them. Really hope you enjoyed this, though.